our second article of the market report, the North Star Quarterly Market Report for Q1 2022. We deal with Mythbusters. And here we really look at the market's communal mind and the thoughts and concepts that the market sometimes gets exposed to and takes on as the gospel truth. We test with empirical data. And there are really three major themes that are pervasive in the system currently that we question as to whether they are fact or fiction. The first is that markets always fall when interest rates rise, and always rise when interest rates fall. We took 10 market cycles, 10 interest rate cycles, both those moving up and those moving down over a very long period of time, to assess whether this was really true. And some of the data is fascinating, and the outcomes even more so. So we would suggest it's well worth reading the article for that alone. The second is the view in the markets currently that growth or quality investing is defunct, was a fad, and that value investing is the only way to go. Here too we've looked back at cycles over many years, and our conclusion is quite simple. There's really no difference between the performance of these two philosophies over long periods of time. And there is absolutely no evidence to prove that value investing is better than quality or growth investing. What we can tell you for a fact is outperformance is all a function of the original starting value, be it a growth investor buying growth stocks or quality stocks, and a value oriented investor buying value stocks. So the starting value and how cheap they are determines the performance over time. And those two types of philosophies oscillate in terms of performance over many years. The third is the view currently that there's only one place to be, and that's value when interest rates rise. The thesis here, which we buy, is that short-dated cash flows usually accompany value companies are worth more in investors' hands than long-dated cash flows from, let's say, very growthy companies. We understand that concept and believe it too. However, there's no evidence in the data to prove that value stocks outperform growth stocks when interest rates are rising, or vice versa. So we've really gone out of our way from a data empirical perspective to assess these myths or facts. And I think the article is well worth reading.